Today, I want to share something with you, something powerful. The earlier you start planning for your financial future, the stronger your position will be. Seriously, let that sink in, act now, and you'll set yourself up for long-term success. In this video, we're breaking down 4 key investing strategies that can truly change your financial outlook. No matter where you are on your journey, these strategies can work for you. So stick with me, because by the end, you'll have what you need to start making smarter, more confident investment decisions. All right, let's talk about growth investing. The earlier you start preparing for your financial future, the better chance you have to succeed. And here's the thing, if you're just starting out, growth investing is a game changer. So, what exactly is growth investing? It's all about finding companies that are growing fast, like really fast. They're increasing their earnings, their revenue, everything, but they might not be profitable just yet. And that's okay. Why? Because as these companies grow, their stock prices usually skyrocket, and so do your returns. It's a long-term play, but the payoff can be huge. Let's look at some examples. Think about companies like Tesla or Nvidia. They're not just making products, they're transforming industries. Every time they report earnings, you see massive growth. That's the kind of company you want to target as a growth investor. Now, I won't sugarcoat it, there's risk. Growth companies are investing heavily in themselves, so they might not be paying out profits anytime soon. But here's the upside, you're getting in early. You're betting on that long-term potential. So, if you're in your 20s or 30s, growth investing should be your main focus. You've got time on your side to take on those risks, and in the end, the rewards can be worth it. Stick with me, because in the next part, we're going to dive into dividend investing, another powerful strategy. Now let's switch gears and talk dividend investing. This strategy is all about steady, reliable income. You're investing in companies that pay you a portion of their profits just for holding their stock. Sounds good, right? But here's the key. When you're young, like in your 30s, I don't want you to focus only on dividends. You should still have growth investments, but, and this is important, it's smart to build a dividend portfolio on the side. Why? Because dividends are your long-term safety net. They give you regular payouts, and if you reinvest those dividends, what's called a DRIP, dividend reinvestment plan, you're buying more shares without lifting a finger. Over time, that can really add up. Look for companies that have been consistently increasing their dividends over the last 10 years. Those are the companies you want in your portfolio. And here's the cheat code. Start dividend investing early, so by the time you're older, those dividends will be generating serious income. You can think of it as planting seeds for future wealth. All right, now let's dive into value investing, the strategy that made Warren Buffett a legend. This one's all about finding great companies at a discount. Imagine you're buying a house. You wouldn't just pay whatever price the seller is asking, right? You want to know what it's actually worth first, maybe get an appraisal, compare it to similar houses in the area. Well, value investing is the same. You're looking for companies that are undervalued, meaning their stock is trading below what it's truly worth. Now, the market is always going to give us deals. The key is knowing how to spot them. And if you can buy a stock at, say, 25 to 30% less than its actual value, you're in a great position for the future. But here's where most people go wrong. They buy stocks at their peak when prices are high. Then, when the market drops, they panic and sell at a loss. As a value investor, you're doing the opposite. You're buying when stocks are on sale. This strategy takes patience, but the reward is that you're setting yourself up for long-term growth without taking as much risk. It's about being smart with your money. Finally, let's cover income investing, a strategy that focuses on creating steady streams of income, especially for when you're closer to retirement. Now, this is different from dividend investing because you're not just looking for companies that pay dividends. You're also looking at bonds, REITs, real estate investment trusts, and other investments that give you regular payouts. Bonds, for example, are a great way to secure consistent income. And REITs? These are companies that invest in real estate, and they often pay higher dividends than regular stocks. Some even pay out monthly, which is a nice bonus. Here's my advice. If you're nearing retirement, you should definitely consider income investing as part of your portfolio. It's designed to give you regular payouts, which is perfect when you're no longer working full-time. But if you're still young, focus more on growth and dividends for now. Income investing will become more important later on when you need that stability. So there you have it, 4 powerful strategies to help you dominate the market: growth investing, dividend investing, value investing, and income investing. You don't have to pick just one. In fact, the most successful investors combine these strategies to create a balanced portfolio. If you're looking for more solid investment strategy, you've got to check out the next video on Warren Buffett's approach. It breaks down how one of the greatest investors ever builds wealth with simple, long-term principles. Whether you're just starting out or leveling up your game, trust me, this is a must-watch. Go ahead, click here and learn how to think like Buffett. Thanks for watching. If this video helped you out, make sure to like, subscribe, and share it with someone who needs it. Keep building wealth, one share at a time.